Good morning, everybody. Happy Thursday. Let's take a look at the futures and then discuss a couple of things here. So, futures for the SPY this morning been a little bit sloppy, but basically flat heading into the open. And now the Qs here, pretty much the same thing. So all we're really doing, guys, is kind of what I expect us to do here for the next couple of weeks. And what that is just a whole bunch of noise and back and forth chop right near that 21 EMA. Now we might get a nice little push to the upside. Maybe we get a nice little push to the downside. But I just think, generally speaking, as we approach earnings for the big leading names, as we approach the election, I just kind of see the market being trapped, in a range like that. Now, we might spend most of our time just chopping here at the mean, but I think any kind of directional move we might get is just going to be a nice little move away from the 21 inside this range. So I think what we can focus on right now, guys, is trades for the chop and then trades for momentum. So while the overall market gave us the daily squeeze, got exhausted, ran back here to the 21, and now as far as momentum goes, you look at a 4-hour chart, and the market's given us nothing to work with. If you look at the histogram for the Qs here on the 4-hour, no signs of bullish momentum, but also no signs of any bearish momentum. Just kind of going from red to yellow, not giving us much to work with. One of the most important charts in the market right now, I think, is this daily squeeze in the volatility index. In the last couple of days here, team, she's kind of flirting with the idea of firing this daily squeeze to the upside. So if we think about probabilities, if the volatility index fires a squeeze to the upside, go take a look at early September and go take a look at what the indexes did. The volatility index here makes this nice push through 30, and you see the market immediately react, having a nice little sell-off. Now, it doesn't mean it has to happen, but thinking in terms of probabilities, a daily squeeze on the VIX fires to the upside, definitely going to see a little bit of sloppiness in the market, to say the least. Now, if we kind of get rejected right here, which you can see has kind of been the case, we run up, we fade, we fade, we fade. If the volatility index gets rejected right here, could get a nice fade right back down, and then that gives the market a better chance of either just holding up just fine or potentially making a nice little push. So I think all in all, guys, that's got to be one of the most important setups in the market right now. So taking that into consideration, that we got a squeeze on VIX, which could send the market anywhere at this point. Taking into consideration, we got no momentum to work with on the indexes. Focus on trades for the chop, and then try to find, call it, those silver linings, PayPal being a good example. So while the market itself is just, let's call it lame, pretty damn lame right now, you do got a good looking setup here in PayPal. So we're breaking through the previous all-time high yesterday. You got all kinds of Bitcoin news, and now we're in the process here of firing off this 4-hour squeeze. So it's your go-to setup, or for me at least, it's my go-to setup, but there's some momentum here. If you look at the 2-hour, the 1-hour, the 4-hour, the histogram going light blue, it's showing us as a presence of momentum here, unlike the indexes. So what I got on PayPal yesterday, guys, was 2 different sets of put credit spreads. Now, one of them ended up being a day trade, and that was for Friday's expiration. So I did end up closing that one and show you guys what we're rocking with here. So I did end up closing that one yesterday, guys, for a little bit over 600. So that was about 60% of its max profit. And now for open positions, next Friday expiration, I got 1 put credit spread left for PayPal, which I'll show you guys in a second. And I'm also trading that daily squeeze there on Nike. So with PayPal, while the market necessarily is not doing anything, we find these good-looking setups. We find these good-looking setups that have signs of momentum. If you're looking for these directional plays right now, we've got to do everything in our power to find the setup where the probabilities are leaning towards potentially this stock making a move in your favor. So next Friday's expiration put credit spread, sold the 202.5, bought the 197.5. So I'm kind of sticking with the same general theme. I find a setup that I think has a probability moving to the upside, but just out of respect for this choppy-ass market environment, I'm not getting aggressive with making calls, rather going with the put credit spread. So that expires next Friday, and if you look this morning, guys, at PayPal, we are setting up really nicely here on a couple different lower time frames. So we take a look here at the 30-minute chart, really good looking squeeze heading into the open. So maybe the move is over and we get exhausted and the squeeze fires to the downside. Maybe the trend continues here. So we released all the energy yesterday. We're taking a breather, getting a nice little break in the action. Maybe the move continues to the all-time high with that 30-minute squeeze fire in there. So examples of stocks like that, good looking setups with signs of momentum, that's where potentially we can be looking for directional trades right now. And I still think using something like a credit spread puts the probabilities in your favor a little bit more. But for the indexes here and just the general market, I kind of expect, guys, a bunch of the same here for the next couple of weeks. Nothing but some nasty chop. So what one could potentially do here is set up an options trade that's going to benefit from a bunch of back and forth chop. I think, guys, an iron condor is something to consider. So what one could do is kind of say go out to November 20th here. And the way I would structure it, guys, is going about $300 out the money on both sides. So for the put credit spread, we can sell the puts at 3,100, buy the 3090s, and then on the call side here, let's go on out to 3,700, and we are going to sell those, and then we're going to buy the 3710s. So pretty good credit here. You're getting about $2, and risk reward here, guys, it's about a 4-to-1. So nothing exciting, but you're looking to get a decent probability trade to bring in some decent premiums inside of a market environment where a lot of folks are just kind of getting torn to shreds right now in that chop. So one contract per side, you got your 4-to-1, you'd be risking 800 to make 200. You could go with the SPY, be a little bit cheaper in that instance, structure something along these lines. You're risking 80 to make 20. So that trade right there, guys, kind of take a look here at the weekly chart. You end up walking away with that profit over the next couple of weeks, ultimately into expiration here, if we can just kind of close in this range. If we do anything other than close above 3,700 or below 3,100, the options on both sides of the chain there, the calls, the puts, they're going to expire worthless. All that premium goes into your pocket. So potentially not a bad way to kind of crank out, call it a high probability 25% return on your risk, as the market is just pretty damn sloppy right now. Of course, it could blow to the downside and break through your strike. Same thing to the upside, but something to consider. So guys, I wish you all the best today. I hope everyone's having a good week. And remember, once the market gets choppy, number one goal at that point is protecting those profits we made on that nice fresh move there off the 21. So we had the daily squeezes, the squeezes fired, we took advantage. Now you got to protect those gains as things get a little bit more sloppy from here. So guys, if you aren't already, please go ahead and subscribe, and also check me out on Twitter at FTM Alerts, and I'll talk to you guys in the next video. Peace out.